So welcome to another video. This video might be long, I don't really know, but today we're going to be looking at EURUSD. Sorry, 1 minute. Okay, EURUSD, and I'm going to be showing you some of the key things I look at for before I actually place trades. Right, so when I've talked about structure, I've talked about range theory and all that. Now most times you have this complication of how do I actually implement this? What are the rules? How do I look for these entries? I think the first thing I always do is understand the direction of the market. For example, now if we're looking at EU is currently bullish overall, but then again, there have been a lot of shorts. Is it wrong to short? No, it's not wrong to short, because you expect market to create impulse, correction, impulse, correction. You expect impulse again, right? Now, most persons who trade EURUSD with correlation by looking at what the XY is saying. For me, I don't really look at correlation, right? So I analyze my pairs separately. If I'm looking at EU, I'm interested in just trading EU. If I'm saying, okay, I want to buy EU, doesn't really mean I'm looking at shorts on the XY. After all, I don't trade that. I trade just gold, EU, GU most times. Now, let me bring up something. So zones, right? Let's talk about zones first. Now, we see this as certain levels of the market. Now, I think I can also add this as another zone. The price actually has reacted from previously in time past. And what we do see here is something really, really nice. We see how price reacted at that level. Right. Now, the interesting thing is you can also trade from zones to zones, right? But the only difficult part is you don't really know if that zone is going to last for a long time or not, if it's going to be a short-term move or a long-term move, right? So that's something you can't really determine with zones. For example, those who took trade from these zones had this movement back up, and then before price came back again, and then gave new entries close to that level, right? So you can say that's like a double zone. Price actually came back to this zone again, created another move before it continued higher, right? Which is quite simple in this case, because most times you'll be like, oh, price has actually mitigated previous levels close to that area before. Does it mean I should also take it? Yes, you can. And, but the only difference is you don't really base off your analysis because of a certain zone, right? You really want to get the structure intact. Know, okay, where are the major levels I need to trade from? Where are the major level I need to understand this market from? So let's go to the 10 hours time frame. So literally I've been playing around, 23 hours, 21, 10 hours, 5 hours, 3 hours, 1 hour, 30 minutes, rather than just using the usual time frame of maybe 4 hours and 1 day or 1 week or 15 minutes, right? That's because I don't try to over refine my entries because of mixed trades. I don't want to be in a situation whereby I come back and I see that this trade activated, but I missed it. This has happened to me several times on gold, whereby I will have price do something like this. We had a nice range that was created, right? Market pushes up, come back, mitigates, and then shoots back to the upside. But then again, if I'm looking at it from our broker perspective, I wasn't tagged in. That's because I over refined. Probably have something like this. After over refining, have something like this, and I'll miss that setup because I over refined, right? And because of that, lately I've tried to go higher as much as possible so that I don't miss the setup. It's better, oh, my stop is actually more big than I miss the trade, but moreover, it's the same amount of risk I'm going to put in. Even if I'm risking with 15 pips or 20 pips, my risk is still 0.5 or 1%. So whatsoever risk I choose to take, I will calculate that based off the pip count, right? So like you understand, if you check some of our videos on our YouTube channel, I did a video on risk, right? I talked about how I risk and the risk templates I've generated, which ranges from 0.25% risk, 0.5% risk, and lastly, 1% risk. Okay. So moving forward, this is like one of the things I've looked at, structure. And another funny thing is we want to understand where is it headed. So turn on the trend. Now let's see. right? So if we start from here, I started marking out from this level. There's an indicator that can do this for you without you having to mark it out. Higher highs and lower low strategy. So that's the indicator, right? But the indicator is not quite perfect, like I would understand that the market would actually look like, right? It's not quite perfect because most cases you have to understand, not all trends will move the way you expect. Now, for example, look at this. This is, what do I call it? This is a bearish level actually, because market created all these lows, right? Because this was trending upward, but then again, we had this bearish movement within that level. Okay. And that's what changed that. And finally, if I was to also let you know, this would be another color, orange. So orange basically is like saying this is where the trend changed again, right? If maybe market was quite bullish before, that's where we had that change in market direction. Okay. So let's first start off with this. I think it's quite important to understand the trend of a market. That gives you a better picture of what to expect. All right. Because most cases you would think, oh, the market is going to be bullish. But then if you don't really understand this part of it, you might miss out on some certain trades. Okay. For example, if we see this, market created high, low, lower highs, lower lows, lower highs, lower lows, lower highs, lower low. After this lower low was created, it created high, higher low, right? The moment that happens, it means this is not going to be red again, because that's where we see the indication the market actually changes direction back to the upside. So market changes direction back to the upside, and then what do we expect? We expect market to keep printing higher, and that's exactly what market did. Higher highs, created a new low. I didn't really mark this out because there's really no intra level to actually say, okay, this is actually the obvious high it created. I wanted to like focus on the major ones, right? To see this high, then lows, right? This actually is a higher low. Now created higher high, failed to create higher low, created lower low, because this time around this lower low took out this previous low, created lower high. This again took out that level, created lower high. Now, most persons who think, oh, market has actually changed, market's not bearish at this level, this is where the mistake comes in, because you don't just assume because of a certain shift and then think that market has changed. What market did here was quite simple. It was just a play to mitigate a range, right? This was just a ploy to mitigate this range. And what do you see? Market just mitigates that range, right? According to our range theory, if you want to learn more about that, check the videos on our YouTube. There are 3 videos I talked about the range theory. You have to look at those videos for you to get like a perfect understanding, because literally I took out time to make that content. Though I also said I'm going to make I'm going to make a course on the range theory for my students, and that will be available before the ending of the year. So the 3 videos you need to watch is understanding range theory. The title of that on our YouTube channel is Range Theory, Best Trading Strategy. The next one is the perfect time frame for range theory, and the last one is best method of implementing range theory. So these are 3 videos you need to take out your time on, watch them really, really well, and you'll be able to get a bit of understanding of how I trade this concept. So this was the mitigated range. Mark that out. You see how market did not break this demand. So everybody that was trying to like look for more shorts, right? Of course, it gave us short entries. I'm also going to mark that out. This is the short entry. You have that range here, mitigated, well mitigated, right? Price mitigated it and then sold off. You have this. So let's see if this even gave a 5-hour. Oh yeah, we have 5 hours. So that's like a clean setup. So if you really wanted to take the shots, this is how your entry would have been. Price come back to that level and then you take it. Now, one of the reasons why is because you do see a shift here, right? You do see the market created a shift at this level, right? Let me just turn this zones off for a minute, then the trend. So market created a shift at that level. Now, this also look like a rate of liquidity in terms of buy side, but then again, you can't really conclude because price previously reacted from a certain supply, right? Price reacted from a certain supply here. And then what happened? That's what made that wick to be created. There's a supply at that level that price came to react from. So if I want to understand more of this, I could just put this and then scale into lower time frame to see, was there an actual body supply that I could look at? Go to 1 hour time frame. Now this is what we call discovery, because you already understand what the market did, but then again, you want to get the perfect idea of why that happened and where it happened from, right? The only way you become better is if you have an edge. You study a certain thing that others don't. So we first have this supply here. So this is our first range. So if I was to look at the next one, it's going to be within this area. But then again, I want to know which part of this level was there an actual mitigation, right? So I'll go to the last time frame I will be checking on in this video, which is 30 minutes. I wouldn't want to go beyond 30 minutes. So just zoom in, and we have that supply. Perfect. So we see that supply there. We could take it from this level. Yeah, you'll see that also was there. So coming back to the 10 hours, we have this. So let's go back to the level I marked up previously. Where's that? So we do have this. Okay, but then again, price invalidates, didn't get to this higher level, right? This may be telling you that, okay, this is, if I was taking this shot, I would have missed this entry because price did not come into that level. Rated this as liquidity, which was beautiful. So basically, my liquidity rate happened here. So I could say this was the perfect buy side liquidity, not the one labeled below, not this one, right? So this is what happened. See that market rated liquidity dropped because this movement to the downside was aggressive, and we do actually have a lot of volume to the downside at that point. If I was to just check that real quick, let's see, we do have volume. So see, volume was within this range, but price didn't come as high as that range, as the line, that is the POC. Price didn't come as high as that. Now if I also was checking the range between this and then the breakout, that's also where the volume is. Quite simple. Now also check this between this and this breakout. We see that the range is within this area also. Now the moment range is within that level, I'm just interested in getting in on the range theory concept. We had a shift because this was a body close. Market rally back to the upside. Even if you watch our video on secret Fibonacci, this actually reacted to it, right? So you see that this is a simple 75% entry. Let me see, did it get to 79? I doubt. Oh, 79 was actually tapped, right? But you would have missed it. So it's best to have used 75 because you're more sure that price will react off it, right? 75 was our perfect entry. Now we see that happen. Market taps into the demand. First time was a week, right? So let's assume you got in on the first time. You're still holding the trade. It comes back again. Now you're losing confidence. Should I hold? Should I close? But then finally, what do you see? You see that the market actually start pushing back to the upside aggressively. And market bought for so long, 10 hour, from your 5 hour, 10 hour. Now the idea of swing trading is you have to understand where is the possible level that market could reverse from. So this level that market reacted from, I do want to know what was at that level, what made price reverse, right? So these are part of the things you study. Now what do you see? You see this area here. Market had liquidity here. Then this was a former breaker block, or people will call it breaker block. Some will call it flip range, anyhow you want to call it. So it's just a basic level. Oh, shrunk support becoming resistance. That price reacted off. No problem, right? Get the concept, which is what I'm trying to let you understand. So these are like some of the few things you have to consider. Okay, so let me just clear this. I'll just save it for now. We'll look at it again. So coming back to the range, what we see, market did that, printed a new movement to the upside. Now, some of you would have asked, of course, there are lower highs and higher lows within this leg that I just marked. Of course, there might be, but I don't really see any tangible reason to mark them out. Like, of course, some of you might have marked out this level and say, higher high, higher low and all that. Yeah, but in terms of what I'm looking at, they're not really so important, but I'm gonna leave that for you guys. So we see that happen. Market gave us this high, after which it started printing lows. From there, we had lower high, lower low, lower high, lower low, lower low, lower high, lower low, lower low. We had this lower high. This did not create a new low, so lower high, lower low. But the reason is I'm focused on where structure was according to my indicator. Now you see that these levels are marked are not important actually, okay? Because if they really are a certain level, the indicator also will show those levels, all right? So I'm just focusing on the major ones. So coming from this bearish, market became bullish. How do we know that change happened? When this high was created, it failed to create a new low. A shift happened here. The moment that shift happened, we see price coming back to this range, mitigate, pushing back to the upside. Of course, you'd have missed this because for myself, I would have refined to this last bearish candle. And market came back later on in the future, right? But did not respect it. So where would you have gotten in? Perfect entry was this bearish candle, and I would have gotten in on this if I had been on chart on that day. But my stop will be a bit wide because I want to cover the full black candle, and I will be looking to target this high, right? And we'll see that happen. I could have also done a 10-hour setup, just hold the trade for a certain period of time, knowing fully well that as long as structure is bullish, I should be good to go. Now that happens, and more importantly, we'll focus on what is happening again. Market pushes back up, gave re-entry. This is the re-entry. Now price mitigates again. That's another entry I would have gotten in on. 10-hour also possible. See, that's 10. Now recently I've just been focusing on 10-hour setup because I believe, since I'm risking 0.5, I can easily make 5% by just holding for a certain period. Rather than chasing so many trades, I could just hold this trade, make my profits, and withdraw. Easy peasy. All right. Now then, I've also explained this other one that happened, this one that happened, this demand, because in a bullish case, I like to focus on buys alone. Now, we also had another one here. I'd have taken a loss on this because my stops would just be like this. But funny how I wouldn't have taken this buy setup because of trend. Because if you look at this, it's very obvious market broke trend, right? So you had this. You had this happen, right? See this aggressive candle. That's already an indication that you should run from looking for what? Buys. Now, for my sell setup, I would have had this as my first entry, but price never got there. Let's see, did price ever come there again? Oh, not yet. Right. So I would have taken that. So for the next one, of course, we see it so obvious, which is this. But price still did not mitigate. So I'd have missed it. Okay, I'd have missed that entry level. Price was really, really close, but did not mitigate. I'd have missed that area there. So I'm going to keep showing you possible entries I could have had. Right. So the next one was this, but also missed trade because price didn't come back. Finally, this, then I would have taken a loss because of this, how price reacted. So the idea is you can't really stick to a certain time frame. You have to look at different time frames. So let me bring on ranges. Now, what you're seeing here is different range level where price creates a range and then pushes back to the upside. So if I was to utilize volume, take from the high to the low, let's see the volume. Now you see the volume was here, and that's exactly where price came back to in this case, mitigated it and then bounced back to the upside. So if I was to doing the volume, from the high to the low. We'll see where the volume is. But what happened? Market broke that level, right? If I also did that from the high to the low, volume was there, price reacted off it and sold back to the downside. So using that volume as a means of entry, confirmation that, okay, yes, who are those dominant of this market? Is it buyers? Is it sellers? See this volume here. Price later invalidated it because when it came back, it was aggressive back to the downside. Then we also have this from this level to this level. See the volume here. Price never reacted off it, broke aggressively to the upside. So these are just extra confluence you can use. We had a volume here. Market reacted from it actually before breaking back to the downside. You see, bounced off, pushed higher, and then sold back down. Okay, so we have this volume here. Let's see. There was volume here. Price reacted before breaking it because the strong was actually very bearish at that point in time. We had this high to this low. Price is here to come back there. Now this low to this high. Market reacted off the volume on the dot and then sold straight away. Sorry about that. So basically, these volume levels are we're able to get where the major momentum for those in charge of the market are sitting. Right? And we're seeing how market is reacting off those levels. Okay. Now I could keep on going and going, but then there's a perfect indicator that will just do that, which is this. To mark out the volume on the full candles, right? I don't really need to mark them separately. So let me just show you possible entries. Now, some of the possible swing entries that market has created, we had this level here. I think I chose these entries from 5 hours. So we had that bearish candle. See how price taps into it and then push it back to the upside. This is yellow because it's here to be mitigated. So we had this other range here, which was perfectly mitigated. This from a lower time frame, I think 3 hours. Yeah, 3 hours time frame. Beautiful kind of setup. This is like one of my best entry type when market just create aggressive candle like this. So that's why those who trade inducement, I really don't see market that way, because in this case, what's the reason for entry? Those who trade SMC, there's literally no reason. They can't say, oh, there's an inducement here, and that's why they took the trade. So that's why range theory is perfect. What we do see is we have weeks liquidity being taken off, which is a strong indication. And then we also have this demand. We have that sell liquidity also here. But then again, we have this unmitigated zone. We have that as a weak liquidity taken. So these are still valid levels on EU that price is here to come to. So it simply means I'm not interested in short on this pair. I just want to buy. Now, there are certain levels I want to buy from. First off, this level is not really a strong level to me because price did not really take weak liquidity, right? The candle that did that was this, took the liquidity and not this. So it's more like this mitigated this level, but still a valid zone because there was actual liquidity grab before that range was created. So which is sort of the reason why I still kept that entry. And of course, we could actually see a 1 to 10 from that entry if market should surely come into this level, a 1 to 10 setup at this area. So I just need to copy that 12 pip stops, make it 120 pips take profit, and that's a 10-hour setup. So this is what I'll be expecting if price really wants to trade from that level. I want to see price come into this range, right? It's as simple as that. But moving forward, let's look at the other levels that was mitigated. We see this supply here, mitigated last bullish candle that created aggressive movement. What market did was come back into it, mitigate. But then again, you notice something really, really nice here. You notice that there is no inducement close to it or something like that. And the short was not really long term. Market just mitigated for a while and then broke off, started buying again, because first off, understanding the trend is quite important. And in this case, the trend is very, 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 very bullish, right? The trend was bullish already. just as you can see, the trend was bullish. So because the trend is bullish, I want to remain on that bias of bullishness rather than just looking for short. But definitely every supply we act as a reaction block, right? So this was a reaction block, and if you took it, let's say you took this trade, let's see, you'd have gotten at least 3R. That is for sure, right? 3R. Yes. So that's a good trade also for those who trade 3R setup. So we see that perfect mitigation in that level, right? Perfect mitigation. Just like we had the perfect mitigation here, which was also very beautiful. Price just taps in and then aggressive and just bounce back to the upside. Okay, sorry, let me make that clear. I can make it red instead. Okay, so we'll have that perfect mitigation. Now if we go back again, we had this perfect mitigation on this supply here that was created. There's another one above that price is here to come into. And let's say, does the 10-hour setup get there? No. So you can even extend it to that level. That's trading from one zone to the next, with the idea that you're only holding this trade for long term because you believe market has some potential to the upside. So we do have this zones here. I'll just add this. All right, so you could hold that and say, you know what, let me hold this for long term. We also have the one above, just in case this level fails. Now you could actually know volume of that trend by using your fixed volume profile also. So if I should take this from this to this low, see there's volume below here. So the moment price trades above this, that supply might not actually hold, which is good for you on the long term if you're on buys. Now, if I also check from this volume here, there's volume above it. So I'm confident that holding it to the next target here might actually be the best decision, right, to swing this setup back to the upside, which is a 20-hour setup. Now, also, if we look at the previous one that got mitigated again, we had a snipe entry this time around. That happened here. Where is it? This. But it wasn't forever. Price just did that and then continued selling, right? Just as we have here. And I'm just using that to annotate every major buy entry that we got. So you understand that the red target signifies where the actual entry is where. Now, if we start with this one, right? This is a simple range mitigated, but if you look at it very well, you actually say this is the mitigation, not actually this, right? And that's the fact. So the actual mitigation happened here because the moment that breakout happened, what happens is a market mitigates that level. Market mitigates that level. And we'll see that happen. Simple mitigation. And then price pushes back to the upside. This actually gave us more than 10-hour setup. Let's see. With our rates just there. Because most time people ask me, why is my stop loss really, really tight? I'm like, it's not really tight. It's not like the stop loss is tight. I'm focused on getting in at the best entry. And then, of course, if market really wants to buy, it shouldn't go beyond. Okay, so we do have a 10-hour setup playing out here in the long run, and this trade would have been very, very long if you actually held it. This is about, let's see, this is about, how many days is that? 10 days, right? Just a week plus, right? Not 2 weeks, just a week plus, which is a beautiful setup if you do ask me, right? So also looking at this gave a 3R for sure, but I'm not sure we could have gotten a 10R. Gave us even a 5-hour setup, right? 5-hour, even more than 5, up to 7. Right, then you see what happened. Market raided that liquidity again, and then bought. The moment this demand was broken, every buy would have been a trap. Now, of course, it's obvious the market wanted to come back to a reasonable supply to short from. That's what happened there. This is a very reasonable supply the market shorted from. Now you ask yourself, is this actually a valid level? Of course, yes, it is. If we scale down to 1 hour time frame, what do you notice we have there? You see this week acting as reaction. This was effect of news. So this is like the full range. And what happens? Market actually mitigates it multiple times. You could have also refined it, but I wouldn't have taken this because this doesn't meet my criteria for range theory, and I would just ignore that. Coming back to the 3 hours time frame, and then focusing on what we're looking at. So we have those areas, major zones that market bought from. So the overall best was still this, where price came back to this demand that was created November 2023, mitigated that demand February 13, and then we had a long-term swing sell. I always enjoy holding a trade for a long period of time because you are not on chart again. You're just watching the market do its thing. You know how much you're going to make at the ending of the day, and it's worth holding. Right? This one, 9.5. So imagine you risk 1% and made 9.5 on your proper account. You're good to go. You withdraw, and then you call it a month or a week, depending on how the payout is, right? So these are the possible entries I would have gotten in on. Now, if we're looking at this range also, looking at the current one, the question now is, what should I expect? So if I'm marking out with my fib, I do want to see a valid pullback, right? For market to buy from that entry, which I've marked here. I'm going to mark that again. For market to buy from this level, I actually need to be convinced that yes, market is going to come in correctively, not aggressively. So this is my unmitigated range. Okay, so I want to see price gradually pull back into this level, and then finally come here, give a confirmation, and then go back to the upside. Right? So this is what I want to see. But for me, I don't really do what I call it. I don't really do the confirmation kind of entry. I'm aggressive. I like to take it one at a time. So if I'm really interested, this is what I'm going to have. But also I could get in on the short, which is not going to be a bad thing, you know. Take the short also. Why am I not taking this level? Because according to what I'm trading, it has been mitigated. You can see that also price has mitigated it. So rather than focusing on that, I could focus on what? This level. I could focus on this level like this. Expect price to come back into this area and then look for short from there, which is beautiful. So let me just mark that out. Can we get a 10R from that? Let's see. If we do get a 10R, it's even better. My stop will just be like this. On target here. Oh, almost 10R, 9.9. Can we do 10? This 8.2 pips. So yeah, we do get 10R. So I like to catch the sell for 10R and also take the buy for another 10R setup. Okay, so let me just take this off, annotate it with this line instead. So this is going to be 13 pips for the buys for 131, right? 10R. So taking the swings from down up, patiently have to wait. Now, some of you might even want to take this entry here back to the upside. Now, let's actually look at it. If I was to take that buy, so this is sell to buy. Okay, I've marked that out. So now let's look at this level here. All right, so is there entry here? We'll just go straight to 30 minutes. I want to see a perfect understanding of what the market is doing. Okay, so the first thing I do see here is we actually had that shift, and the shift came in with a body close, right? Which is very, very valid in this case. We had the shift, we have our range. It's not really clear. So 1 hour time frame, what do I see? I see this. Where's the best entry if I was to take it? This. But what do I want to see first? I want to see price take at this level, come back, and then push back to the upside. That gives like a valid indication that yes, market is going to utilize that area. So we have this. This is what I call it, reversal range there, spotted. All right. So I want to take this, and where would I want to target? Of course, I'm targeting the previous entry that I had, right? Which is this. Can we get a 10R from this? Let's see. or we even get more than 10. So this is also perfect to take on market open. All right. Beautiful buy. So this is like the first buy I would expect to happen. So then again, let me complete the annotation for this. This is a type B range created above. Also for this type B range created below, because it's a continuation type of entry, just as you can see. Okay. I don't know why that isn't showing up. Okay, so we have that. Beautiful. So let me just include that here. So I always try to get the best entry. So since I've gotten this possible entry here, I'm going to take it. And another thing is, if I was to also utilize the concept of fib, I want to see where is the 79% or 75%. Is it close to my entry? Of course, 75 is close to my entry. So means 79 should be on my entry. Okay, very close, very, very close. And I want to take that. So you see this level here. Let's see on 1 hour time frame. That's the last bearish candle. Okay. Let me even check 2 hours. Okay. 2 hours is 79. So I might actually want to take the 79 as the entry just to be on the safe side of things. 79, let's see, can we also get the 10R? Oh yeah, we do, which is also perfect. So I'm trying to avoid miss setup, right? Like I said before, most times when you over refine, you miss your trades, and that is not nice. It's not nice, trust me. So we have this level mitigated. We expect price to come back, tap into this area, and then buy back from this area. All right, look for buys to the upside. Is there any other confluence you can say we really saw? That's why we're looking for buys. We had this demand here, right? It was never invalidated, so it's still a strong support zone. That price is likely to still continue respecting this area here. Previous resistance, support again. So we do expect price to do a final touch and then give us this movement back to the upside. So that's what I do want to see. So basically, this is the idea behind how I will take my setup. Now you see this range here that actually mitigated. This was a perfect sell setup. Your entry would have been there. Your stop would just be here. And that's a very beautiful mitigated range already that happened. And what do you see? You see how markets react off it. And then sales came in aggressive. You had your 10-hour setup. Okay, this didn't give a 10-hour setup. This was 9.8. So the moment I start seeing exhausted price, I might have gotten out of this trade. Let's say at this level here. All right, same thing happened with GU. So if I was to show you this GBP USD trade I had marked out, same thing happened, right? Took my sell from here. I didn't really take this setup, but I marked it out. I was trying to buy from this range. I think I was trying to buy from here to see if price would go higher to this level here. But price rather use this area here. And then what happened? We'll see this mitigation. This, in this case, hasn't really given us confirmation for buys. Like to say, okay, let's look for buys back to the upside. Because if we're marking out this level, say from this high to this low, 79 is still above. So for a possible retest, market might want to go higher and then continue lower again. But that is yet to happen. I think that was one of the reasons for this. This was a beautiful entry using 79 and your stop just at the high. All right. So of course there was a range here, beautiful range, mitigated. So I used the volume rather than the doji, the most voluminous candle within that range. So that's one of the things you have to look out for when you're looking at this concept. So I do ensure that I make my videos not too long, but this is enough, and 40 minutes is not so bad. So ensure you subscribe. More importantly, always drop your comments, your feedbacks, and share with your friends so that they can also get to learn a thing or two from the concept I use while trading. So see you in the next video.